Candlestick charts show us how crypto prices move. Many traders look at them every day. These charts started in Japan with rice merchants. Now, we use them for Bitcoin and other coins. They help us see market sentiment. Crypto markets can change very fast. Traders need quick information to make choices. Candlestick charts provide this clearly. They show more than a simple line chart. Candlesticks tell a fuller story of trading. They show the battle between buyers and sellers. Candlestick charts help traders make better decisions. They can show if buyers are strong or if sellers are in control. Understanding these charts is a key skill. It can make a big difference in trading. In this guide, we will learn all about them. We will look at the parts of a single candle. We will learn about common candle patterns, and we will understand what these patterns mean. Let's begin this journey into crypto charts. Every candlestick has a main part called the body. The body is usually thick and has a color. It tells us about the open and close prices for a specific time. For example, it could be for 1 hour or one whole day. Then, there are thin lines called wicks or shadows. They can stick out from the top or bottom of the body. The upper wick shows the highest price reached. The lower wick shows the lowest price reached. Wicks give us extra clues about price action. The body and the wicks work together to tell a small story about trading. Imagine a candle with a long upper wick. This might mean sellers pushed the price down. Now, imagine a long lower wick instead. This could mean buyers pushed the price up. Each candlestick is like one piece of a puzzle. When you put many candles together, you get a chart. This chart shows many stories over time. Patterns can start to appear on this chart. These patterns can give hints about future prices. Understanding each part of the candle is vital. Knowing the parts helps you read the story. The color of the candlestick is very important. It gives you a quick signal about price. Often a green candle means the price went up, and a red candle means the price went down. Green is for bullish candles, meaning buyers are active. Red is for bearish candles, meaning sellers are strong. A green candle means the price closed higher than it opened. The bottom of the green body is the open price. The top of the green body is the close price. This shows that buying pressure was stronger. It is a sign of positive market sentiment. A red candle means the price closed lower than it opened. The top of the red body is the open price. The bottom of the red body is the close price. This shows that selling pressure was stronger. It is a sign of negative market sentiment. The length of the candle's body also tells a story. A long green body shows very strong buying. A long red body shows very strong selling. Short bodies, both green or red, can mean indecision. Colors give you an immediate visual clue about strength. Section 4. Key Candlestick Patterns. Spotting Market Turns Part 1. Candlestick patterns are special shapes made by one or more candles. These patterns often have interesting names. They can signal that a trend might be changing or continuing. Learning patterns helps you anticipate market moves. One important single candle pattern is the doji. A doji has a very small body, sometimes just a thin line. This means the open price and close price were almost the same. A doji signals indecision in the crypto market. It often appears when a trend is losing steam. It can be a warning that a reversal is near. Another key pattern is called the hammer. The hammer is usually a bullish reversal signal. It has a short body at the top of the range and a long lower wick. It often appears after a period of falling prices. It shows that buyers stepped in strongly. Then there is the inverted hammer pattern. It also suggests a potential bullish reversal. It looks like a hammer, but turned upside down. This pattern is also found after a downtrend. It shows buyers tried to push prices up. Section 5. More Powerful Patterns, Confirming Market Sentiment Part 2. Some patterns use two candles to tell their story. Engulfing patterns are very strong reversal signals. They are quite easy to spot on a chart. In these patterns, the second candle is much bigger. The body of the second candle completely engulfs the first. This shows a significant shift in market power. Let's look at the bullish engulfing pattern. This pattern can signal the end of a downtrend. First, you see a small red bearish candle. This is followed by a large green bullish candle. The body of the green candle completely covers the red one. This means buyers have overwhelmed the sellers. It's a very positive sign for crypto prices. Now for the bearish engulfing pattern. This pattern can signal the end of an uptrend. First, you see a small green bullish candle. This is followed by a large red bearish candle. The body of the red candle completely covers the green one. This means sellers have overwhelmed the buyers. It's a very negative sign for crypto prices. Remember, patterns are more reliable with confirmation. Section 6. Putting it all together. Tips for crypto traders. Candlestick charts are wonderful tools for traders. They give you a window into market psychology. They show the fight between hope and fear. They help you understand market behavior better. This is especially useful in the crypto market. Emotions can often drive crypto prices significantly. Learning to read candles is learning to read the crowd. Here is tip number 1 for beginners. Start by looking at longer time frame charts. For example, use daily charts or weekly charts. Patterns on these charts tend to be more reliable. There is less noise than on short time frames. Get comfortable with the basics on clearer charts first. This will build a strong foundation for you. Here is tip number 2, always seek confirmation. A single candlestick pattern is often just a hint. Wait for the next candle or two to confirm the signal. You can also use other technical indicators. Things like trading volume or moving averages help. Don't rush into a trade based on one pattern alone. Patience and confirmation are your friends.